What's up, everybody? Dave Bartosiak back here on the holiday shortened week. And I've got another chart of the day for you. This time, we're going to be talking about Autodesk, ticker ADSK. And they just reported earnings yesterday. Had a beat and a raise, which is good. Beat on earnings, beat on revenues. And then what happened? A little bit of negativity. So we're gonna look at this. Let's look big picture here, first of all. And you see these highs up in 2021, a really big pullback. And then it's basically been working in this range. So whenever I see a big range like this, first thing I like to do is draw those fibs. I don't know why my fib coloring's all off. Let me go ahead and mess with some of this. We're gonna drop some of these off. There we go. Now that looks better. Okay. Took those extensions off. So here we have, and remember, you can get really granular with this. I can go ahead and find exactly what this top is, right? So I'm seeing 344.39. So if you go into these settings, you can put the coordinates of 344.49. I think that's what I said. 344.49. Yep, 344.39. There you go. And then you can look at the lows, and you see 163.20. I believe that's the low, 163.20. And now you get the exact levels here. Okay, now this, if you've been watching me for a while, this shouldn't come as a surprise that this 38.2 came into play multiple times. Okay, and then this 23.6 became sort of a soft area where it would wiggle up and down. At the same time, you had this 200-day moving average down there, the 50-day moving average. So that gives you sort of, that confluence of support. What I mean by that is just multiple levels, multiple technical levels are kind of coming into play at the same time. So this served as a nice little floor. This 38.2 is serving as a little bit of a ceiling. And then as the stock rallies, these levels come into play again. Okay, now why am I saying this? Well, here's the important part. Now let's zoom on into what's happening recently. You have this sort of top end of the range. Looked like the stock was heading to totally fill this previous range. You get the gap down. So here's an area overhead. Here's an area below. But we also have this 50-day moving average. So what's come into play today is that 50-day as the stock has gapped down. Now, again, this is a gap down on an earnings beat, a revenue beat, as well as a guide higher. Sometimes the guys with the better seats have an agenda, right? So meaning the big money out there, they like to use earnings days to move their money because typically you have a lot more volume on earnings days, right? So because of that added liquidity, they tend to make these moves. Now, this could be a huge fund that's just peeling off a little bit of exposure, and it just happened to gap the stock down, right? Or there are other firms out there that know that there's a big firm trying to do that, and they force the stock down and make the firm sort of liquidate a little bit lower. But if this is something that, a big guy that's accumulating down in the 230s, they don't really care all that much, right? Okay, so what would I be looking for? Now, you had this previous gap. So this is a gap up from November 5th's high of 293.06 up to the low 297.91. So now this top end of this range is 293.06. That becomes a level to keep in mind for today. Where do we get down to? 292.04. Gap filled, okay? Gap has been filled. That's a good thing for the bulls. What's not a good thing right now for the bulls, and the market's coming under a little bit of pressure today, is that this market, the stock opened, rallied up, failed at 300, and now has been seeing some pressure. So I would, again, that sort of 293 levels, a level to keep an eye at. You do have this 50-day moving average that's right below the current price at 289.10. If you get the more patient folks can wait for a pullback to this fib level. Again, that feels like a long ways away, but if you're sort of longer term and you're adding to this, little by little, you can wait. For folks that are looking for more of a short term sort of swing trade, I would still be waiting. So like tomorrow, see if it takes out today's lows and then finds a bid. If it got down to this 50-day, that'd be like textbook for it to get down there and then find a bid. Plus, you could put your stops just below this fib, right? So you get a decent sort of risk versus reward there. You're talking about that. Now, this gap might be defended also, so that's another risk. So just something to keep an eye on These are sort of the key levels on this chart in the short term that I would look at. Another fib for you to look at now, though, is coming off of this swing low in May to the recent action today. And look, would you look at that? That 23.6 of that level definitely came into play. And then below that, we have this sort of 276 area, which is pretty close to that bigger fib that we had there, right? So you got a couple key fib levels there. Overall, if you're bullish on the stock, not a bad idea to add on a dip like this. And if it rights the ship and it bounces there, you still have these highs that the stock hasn't seen in a while, which could potentially be targets. All right, everybody, that's all I have for you here on my chart of the day. Next week, we're going to have a little bit of a break because we've got, some holiday action. We're going to be in and out of the office. So there's stuff that's going to keep me awake from the desk. So everybody have a happy Thanksgiving. Be sure to follow the author here if you're on Zacks.com. Subscribe to the YouTube channel, and we'll check you all out in a couple of weeks. For everybody here at Zacks, I'm Dave, and I want to say thank you. We'll see you later.